Not good news, but it could be worse.
How's that?
It could be Tottenham fans.
Yeah, so I'm pleased to see Anthony, my old sparring partner, is back with me this week after his recent stay in hospital and fully recovered, I hope, Anthony.
Yeah, fully recovered after the week in hospital. So, back to the grind now, and thanks for the flowers, Paul. So, Paul, once again, foreign exchange markets dominated by the conflict news.
Yeah, rinse and repeat really, but there seems to be a bit of market fatigue setting in with the headlines.
At first we would see major moves on headlines, but now it seems that traders almost don't know what to believe in at the moment.
Precisely, yeah. So although investors are buying dollars and becoming risk averse on negative headlines, the moves don't seem to be as exaggerated or as sharp as they were when the conflict first began.
And that's because they are having to reverse positions when Trump pulls back or postpones what he said hours later.
Yeah, that's right. However, yesterday there were signs that risk aversion was becoming more entrenched across markets. Equities had another bad day, and oil was on the rise again.
And you can see why, with almost 8,000 US Marines moving into the Gulf and Trump warning Iran to get serious before it's too late.
Yeah, it looks like Kharg Island, where Iran exports most of its oil from, could be a target, or even the Straits themselves for a ground invasion, if it occurred.
But boots on the ground are not going to be popular at home.
No, and his approval rating was dropped below Joe Biden's worst approval rating when he was president.
So as it stands, we could see a major escalation over the coming days.
Yeah, it doesn't look good.
But someone's quite pleased about oil going up.
Yeah, you mean Putin. Russia will double its revenue from about $12 billion to nearly $24 billion from oil sales this month.
God, that's not right, is it? And with inflation set to rise, markets have increased their expectations of interest rate hikes this year.
Yeah, they have. Yeah, markets think they'll be 3 by the Bank of England this year and at least 1 by the ECB. Lagarde said this week that the ECB will not tolerate inflation being above 2% for too long. While Hugh Pill, the Bank of England's chief economist, vowed to act against the damaging effects of the war.
So rates are going up then?
Yeah, and to top off all the doom and gloom, the OECD, the Organisation of Economic Cooperation and Development, said on Thursday the UK is facing the biggest hit to growth out of all the major economies.
Not good news, but it could be worse.
How's that?
Well, it could be Tottenham fans. We've had UK inflation data out this week, but no market reaction.
No, and it was February's data and it doesn't include oil prices, so figures are already out of date. Markets will be much more interested in when the data is published for this month.
So next week's data could be more closely looked at, considering some of it would have been collated since the conflict began.
Yeah, it could do. UK GDP data for Q4 is out on Tuesday, but that's last year's. And also preliminary inflation data from the Eurozone. Wednesday we got US retail sales and PMIs. Nothing really Thursday. And Friday we're up.
But hey!